Hello everyone, I'm Patrick Fross with Fross and Fross Wealth Management, and welcome to our market and economic video update for the week of October 9th, 2023. Remember, nothing here is to be considered a recommendation, and please read the disclosures in the email to which this video was sent, or if you're watching on social media, please visit our website at frossandfross.com. Well, we'd like to start by saying that our hearts go out to the people of Israel who have been the center of senseless attacks over the past few days. We're keeping a close eye on how this conflict could affect the markets. When the news of the attacks first broke, we saw a slight rise in oil prices. Our analysis showed that this appeared to be an initial knee-jerk reaction due to the risk of supply chain issues and interruptions in Iran. But we believe the economic impact should be limited, barring a spread of the conflict to other surrounding regions that are large oil producers. Well, looking back to the U.S., last week was a busy day for the markets. On Tuesday, the 10-year Treasury hit its highest level since 2007, putting added pressure on mortgage rates. On Friday, we saw a jobs report that was almost double what Wall Street estimated. While this was great for the economy, this hot report initially gave the impression that good news is sometimes bad news. And the Fed has said multiple times that they will be data dependent. And this report gives them yet another piece of data to possibly raise rates again before the end of the year. Markets began to sell off and then price in another rate hike. But then something happened that we haven't seen since the regional banking crisis in March. The markets then came roaring back in dramatic fashion. After falling almost 1% in the morning, the S&P 500 closed the day up over 1% and pushed the index to its first positive week in 4 weeks. Ultimately, the markets took the jobs report in stride and determined that the good for the economy outweighed the bad of another potential rate hike. Well, the Fed will get another crucial piece of data this Thursday when the CPI report is released. This report can either push them to hike or can allow them to be able to pause at the next meeting at the end of the month. One positive that we've seen from this rate hike cycle is the return to an attractive yield on CDs and treasuries. Here at Fross and Fross, we're pleased to offer a large variety of CDs from many different banks. If you'd like to know more about current CD rates and how they can be implemented in your portfolio, please give us a call. Well, there's a lot to look for in this coming week, from an increase in geopolitical risks in Israel to a potentially defining CPI report right here at home. Rest assured, your team here at Fross and Fross is here to serve you and will be here with you every step of the way. If you have any questions, please do not hesitate to contact us at 352-205-7800. Once again, this is Patrick Fross with Fross and Fross Wealth Management, signing off for the week of October 9th, 2023.